We're welcoming Rob Lees from Mortgage Choice Blue Mountains to the show.
And Rob, today we're going to be talking about ways to pay off your mortgage faster.
That's right.
Sounds good to me.
Okay, Rob, when we're focusing on paying off the mortgage faster, what are the 2 to 3 most effective strategies for achieving that?
I've actually got 4 here.
Oh,
Is
4,
that okay? I think the question only said 2 to 3, but we'll try and squeeze in an extra one.
Right.
Yeah, two bonus.
A little
2 bonus.
Strategies.
Yeah,
That's right. Well, there's no real magical formula. It just means that you've got to pay. I mean, the most important thing is just try and make a bigger payment. So there's always a minimum payment that you need to make, and if you can make just a little bit more, it's going to get you ahead faster. And I just did an example here. Let's say you've got a $400,000 mortgage over 30 years. Let's say it's at 5%. Your repayments would be $2,150 a month. If you increase that by $350 a month up to $2,500 a month, you'd pay off the mortgage in 22 years. So $350 a month, you're going to save 8 years on the mortgage. So
significant.
It is significant, but it's just a little bit more than the minimum is going to be a big saving. The other way to save is with an offset account. So the offset account is a normal everyday account that's linked to the home loan. And if you've got money in that account, the way that the bank works out the interest is it's a net balance of the two. So that normally is going to save you a little bit of time, a little bit of money and time on the mortgage. The other one is just to make sure that you're getting the best interest rate. Banks are very competitive at the moment and discounting heavily. So if you've done nothing with your mortgage in the last couple of years, it's probably good to talk to either your bank or someone like me and see if you're getting the best rate. And the fourth one I thought I'd throw in there too is, and this isn't for everyone, but sometimes buying an investment property can help you pay down your personal mortgage a little faster. And that's how I paid off my mortgage on my first house. I had an investment property and it gained a lot of value, and when I sold it, it just cleared the debt out on that property. So if you buy right in terms of an investment property and you hold on to it long enough and you sell it, that can be sufficient to pay it off as well.
Okay, Rob, what about also the ability to be able to just throw lumps of money into the mortgage from time to time? That also works?
Yeah, absolutely. So if you have a lump sum, if it's a bonus, if you paid a bonus through your employer or whatever, yes, lump sums can significantly reduce the mortgage too.
But you're constrained. If that's fixed, you're constrained, aren't you?
That's right.
If
it's a fixed rate, there are limitations on that, and you do have to be careful. Yeah.
Yeah. Still saves time at the end of the term, as it were. All right. So, are there any particular types of mortgages that assist the faster payment as
such?
Sure.
I think just what we were talking about then, that variable rate loans give you a lot more flexibility in that regard. So you can make extra payments, and there's no limit. Usually there's no limit on the amount of extra payments that you can make. Fixed rate loans usually have restrictions, so there may be a limit in terms of the extra payments that you can make in a year. It may be $10,000 in extra payments per year, or even over the term of the loan. So having a variable rate will give you the kind of flexibility you need. And I mentioned earlier about the offset account. So having an offset account linked to the home loan can help, but you do have to be careful of the fees and make sure that it's still going to be worthwhile. Because most lenders will charge, the big banks will charge between about $375 and $395 per year to have the privilege of an offset account. Some of the small lenders don't have any fee on their offset accounts though.
Thank you for your sage advice as always. Look, we'll have a little bit more music and then we'll come back and talk more with Rob about paying off your mortgage faster. Here's Tom Waits with Drunk on the Moon. Or you can just imagine sort of in a nice lounge, listening to that, nursing a drink and listening to that kind of music. Very cruisy, very cruisy. Tom Waits with Drunk on the Moon. And we're back with Rob Lees. Rob, tax issues. Are there any tax issues to be particularly aware of associated with an accelerated mortgage payment strategy?
Yeah, well, only if you're paying down an investment loan or a loan that relates to an investment property. If it's an owner-occupied property, no issues whatsoever. The goal is always to pay down your personal, non-deductible debt first. So if it's a loan that's related to an investment property, it's probably better to put the surplus cash, if you've got surplus cash, to put that in an offset account and not pay down the loan. And the reason for that is if you pay down the investment loan and then you want to redraw that back out and to use the funds for personal purposes, that portion will no longer be tax deductible. So it'll be better to have it in the offset account. That will reduce your interest, but you can draw it from the offset account and use it to buy another owner-occupied property or to buy a car or whatever it might be, and then you're going to still maximise your tax deduction.
Okay, so Rob, what are the advantages of paying off your mortgage sooner versus, for example, putting your money into super or other fixed investments?
Yeah, well, everyone wants to get rid of their mortgage. And I guess the reason for it is it's such a burden on us, isn't it, in terms of our monthly commitment. So it's always a big relief when the mortgage is paid off. But it isn't always necessarily the best thing to do. So particularly for people who are at, well, our stage of life, over 50. We are over 50. Only just.
There are about 15 things I could say right here, but we'll leave it at that. Yeah.
So people over 50 and people who are getting toward retirement may actually be in a better position putting any surplus cash into superannuation rather than paying down the mortgage. And the reason for that is that superannuation is taxed concessionally. So it may be, and to get the right advice on that's important, it may be better to actually contribute to super, and that gives you more choices, particularly once you turn 60 and you can roll what's in your superannuation over to a pension fund and draw a tax-free income, and the earnings in that fund are tax-free as well.
Well, terrific, Rob. So some great strategies there and ideas for paying off your mortgage sooner. And who doesn't want to do that? Hands up those who have a mortgage and don't want to pay it off quickly, just want to let it lag and lag and lag. And, of course, the longer it goes, the more money goes to Mr. Bank. All right, Rob, thank you again very much for joining us on the show with your words of wisdom, and we look forward to your coming back again next week.
See you next week.
For our finance segment. That's Rob Lees from Mortgage Choice, Blue Mountains and Penrith, and of course you can contact them on 4739 9749 or visit their office at 3/13 Hope Street in Blaxland. We'll see you again next week, Rob.
See you next week.